This is Cece. Welcome to the Orbit. It is Thursday, January 25th. We've got stocks higher approaching the open. We're looking at the SPY, which is up just shy of 0.5%. Options coming into today, we're pricing about 0.4%, which we're consistently seeing. That 0.4, 0.5, 0.4 being on the is about as low as you're going to see it in SPY and SPX. So we are already up at that expected move pre-market. We'll see how the stocks react after the open. Of course, yesterday, keep an eye on these highs. This is 4,900 or so in SPX, and it's about 489 in SPY, and that is above the expected move for this morning, and it is about $1.50 away in SPY as we are looking now. So that's another level to keep to the upside if we are higher intraday. Now, of course, the reason we are higher, or one of the main reasons, is a much stronger than expected GDP print, and that has stocks higher. And get into earnings because there's something interesting, something we've been talking about on the Orbit and on Twitter X and all the last few days, is we've got stocks that are coming in, especially we're getting this first glimpse of these mega cap tech companies with the Netflixes and the Teslas, and we're going to have Microsoft and Alphabet next week. But Tesla's options were pricing about, we're seeing it here about a 7%, 6.5%, 7% expected move coming into the print. The stock is down about 8.5%. That is very similar to what we saw in Netflix to the upside yesterday, where options were pricing about a 8% expected move into Netflix's print, and then it was up 10 to 12%. It was up 10% to start the day, and it was up 12% at points yesterday. And that is something to watch for because volatility, the earnings volatility of stocks cannot escape the backdrop of volatility that they are in. If volatility is really low, and volatility is really low across the board right now, with the VIX at 12.5, then Tesla and Netflix and Microsoft options are going to reflect that as well, because options traders and investors are not going to want to pay a bunch of money for options when the market isn't making big moves day to day, because then even timing that earnings might be expensive if you buy it too far ahead of earnings. So what you want to look for, or one thing to look for in these names, is it low versus prior moves? And clearly in the case of Tesla, that expected move of under 7%, you can just see here that the prior three, and if you go back farther in time, the prior four earnings moves were all around 10% and up to 11% in this case. Options were inexpensive compared to history. And so it wouldn't take much for the stock to move beyond that. Now, that vol backdrop a lot of times will be true. And there is a reason that a company, fireworks are not expected on that earnings event. But when you're looking at these big mega cap tech names that are such a big part of these indices and ETFs, look for those times when an option is pricing a much smaller move than you've pretty much seen consistently in that stock. And just be careful if you are a premium seller in that. At those levels, you might want to go a little farther outside those levels. And as we pointed out in Netflix and Tesla, it's also an opportunity if you are using that as a catalyst directionally into the future, then you might find that going out a month or two, you are still going to find quite low volatility. Let's just go to Microsoft real quick. This earnings event next week, we are seeing about a 5.4% expected move in Microsoft, and about a 5.4% expected move in the options market. If you go out to March, which is a month and a half out, the expected move is only 6.6%. So you are not being penalized a ton for going out in time if you're bullish Microsoft and you're bearish Microsoft. Look for, if you are in any of these names that are reporting, look on the Options AI platform in the app and price out some of those call spreads or put spreads to those expected moves, and maybe even go a little bit beyond those expected moves. And you are going to see not break evens that are not that far from had you just done it for earnings. And of course, you get 1.5 months for that to happen rather than just 1.5 days.